stocks slip after a strong opening for the truncated trading week. FMCG and utilities lead the decline, while auto and capital goods eke out gains.
Reliance reported a weaker than expected quarter for the O2C business, hurt by the windfall tax, even as telecom and retail report strong performances.
ICICI Bank and Kotak Mahindra Bank deliver strong growth with higher margins, but mid-rung lenders such as RBL and IDFC First Bank see slippages rise.
JSW Steel gains after the company tells CNBC-TV18 that the margins will improve in the second half of this year, and the company has pared some debt despite adverse forex impact.
42-year-old Rishi Sunak is set to assume office as the first Indian origin Prime Minister of the United Kingdom. The son-in-law of Narayan Murthy will take over from controversy-ridden Liz Truss.
Hello and welcome. You're watching us here on Halftime Report this afternoon. I'm Mangla Malu. With me is Ekta Badra. We come to you after a Muhurat session where we did extremely well on our indices. Currently pairing some of those gains made yesterday. In fact, now the Nifty is down around 42 odd points. The Nifty Bank is the one which is leading the frontline index lower, and that's primarily because of some profit taking in a couple of these large cap names after a good performance in their business. The only heartening fact today is that the mid cap index is doing well. It's outperforming after a spate of underperformance against the frontline index. Hi Ekta, happy Diwali.
Happy Diwali, Manglam. Yes, absolutely. In fact, a lot of the banking stocks are at fresh 52-week highs. We're going to discuss that later. IGL reported a miss in Q2 earnings with margins lower than estimates. Sonal Bhutra spoke with Sanjay Kumar, the MD of IGL, and began by asking the company the outlook on margins and price hikes going forward. Listen in.
The EBITDA margin went down. This is about, July to September quarter, and during that quarter we had high prices of APM, non-APM gas, and because of that we had slight hit on the EBITDA margin. We have taken one price hike in October. We are considering what is the impact of that. Will it affect our market, and we will take appropriate response to the margin issue in few days.
Okay. So let's talk about that, your market demand or the conversions at peak level around 16,000 to 18,000 per month. What is it so far in October? Because with the price hikes, the general understanding also is that the discount between the pricing for petrol and diesel to gas is going down. It's narrowing now. So do you think it will be difficult to take price hikes from here on?
It is going to be a bit of challenge to take further price hikes, but we still see some headroom. When you compare to diesel prices and petrol prices in different locations and geographical areas that we are operating in. So the conversion of vehicles was earlier 18,000. That was the peak we had reached, and now we are at around 14,000 vehicles per month. We would like this market to be maintained, this kind of demand to be maintained so that, growth is there. And that is why we are always calibrating our price moves.
Okay. So 14,000 conversions have come down now for you, but you expect it to be stable. In that scenario, what would your volumes look like? At around 8 MMSCMD this quarter, it is one of the highest levels that you've seen. Will you be able to maintain this if the demand scenario remains the way it is?
See, even if we earn slightly less, even if our earning per SCM is slightly less, we would like to grow to 10 million cubic meter per day. Presently, this quarter, we are at 8.09 million cubic meter per day. And we hope to reach 10 million cubic meter per day in 2 years from now. And that is our prime target, because we feel that the gas prices are temporarily at such high. The moment the geopolitical issues are resolved, and the government has taken a very significant initiative in the form of Kirit Parikh committee. We hope they will look at the problems that CGD sector is facing, and they will come up with certain solutions that people are discussing about presently.
Okay. So do you have any idea by when can we hear from the Kirit Parikh committee? Because they were supposed to do it by 30th September. They asked for more time. Any discussions there?
So they asked for one more month. IGL is not a part of that committee. We are only, hearing what you may be also hearing. It should be few weeks when the report of Kirit Parikh committee may be submitted to government. And after that, there may be some processing time required for implementing them. We don't yet know what is the recommendation because the report has not yet been submitted. But the interactions are going on. Certain players in the industry are involved. They have been attending meetings. Although they have not divulged what exactly is the solution that the committee is thinking about for CGD sector.
Okay, so then time will tell what's the outcome there. You spoke about reaching volumes of 10 MMSCMD in next 2 years. Some of it, of course, by more geographical areas coming under your purview. The other one is when we spoke to your colleague last time in an interaction, they said that you're looking at acquiring smaller city gas distribution stations in Maharashtra or in Karnataka as well. Any update on that? And is that something that will add to your volumes as well?
Sonal, see, organic growth is always, part of strategy of all companies, and like that, IGL is also working on those opportunities. We are not yet these opportunities that are presently being discussed. They have not yet reached any finality. They are in due diligence stage or under discussion stage. There are some more opportunities that we are looking at. We would like to grow organically. We would like to become a pan-India company. That is the part of strategy that we are following. And as of now, I will stop at that in this regard because I would not like to divulge anything more than that.
No, just one follow-up on that. Something that will be decided, say, in this financial year or the next one, just an indication?
Few of these transactions may be concluded this financial year, although with a kind of CP, which is usual in these transactions. Let's stop there.
Okay, so some more questions on gas sourcing as well. What is the amount of gas that you're getting under the domestic allocation, and what is the average pricing for you as we speak?
6 million, 5.9 million is the present gas volume that is available. The APM, non-APM gas, we are consuming about 8 million. So remaining gas we are sourcing from long-term contracts, some spot volume. We are also buying some volume from our exchanges. As of now, the price of the long-term RLNG, which is the shortfall, is around $12-13. The APM, non-APM gas is priced at $8.57. So you can work out with that, some VAT and then transmission of pipeline transmission, etc. Little bit of volume, maybe about 0.1 million or 0.2 million, up to 0.3 million. We are some days of 0.3 million because the demand is varying every day. We are buying from exchange and they are at higher prices of around $20.
Okay. So, is it slightly lower, the domestic allocation, than earlier? Just confirming. Or is it stable?
Yeah. From 1st of October, the allocations went down a bit because some part of HTHP gas, which was earlier part of this basket, has moved to the market-determined mechanism.
Okay, so that's the management of IGL talking to us. Stock up around 6% odd. Need to take a short break. But up next, we'll be talking to another stock which is buzzing around. We have the chairman and the MD of Rajratan. Welcome back. Well, definitely a mixed session at this point in time. So the mid-cap index is holding with a gain of around 0.4%. We have the bank Nifty, which is a bit subdued. But if you look at individual stocks, that's really where the action is. So South Indian Bank, which is flashing on your screen below, would be case in point. There has been a reduction in terms of slippages for South Indian Bank this time. The stock is really reacting after coming out with its numbers on Thursday. So, the street really likes probably the commentary from the management. The stock is up around 16 odd percent. Yes, 13 rupees stock, but is sitting at a fresh 52-week high. In fact, a lot of the other banks are also sitting at fresh 52-week highs. Case in point would be ICICI Bank, Federal Bank. Both these came out with numbers already, but do watch out for something like a State Bank of India, which is releasing numbers on the 5th of November on that particular Saturday. and SBI is showing some amount of momentum, probably based on the fact that all the other banking numbers have been so positive. So it's rubbing off on the SBI. That stock holding up with a gain of around 1% at this point in time. So it's really about individual financials, individual banking stocks today. But on that note, let's listen in to some important market opinion coming in from BSE member Ramesh Damani on Diwali as well as the market. Stay tuned.
We are hoping for a 10-year bull run in equities in India. Why would I buy gold, which pays me no dividend? It won't even tickle me back. So I'm very clear that I want to remain invested almost fully in equity. I don't even like FDs at this point because inflation may eat up into your returns out there. The railway PSUs, you look at the basket of railway PSUs because these are the blunt instruments the government is going to use in order to express their capital expenditure over the next few years. So I think there's a great opportunity in those stocks. There are 4 or 5 listed. I'll name them, but I'm not recommending any of them. Railtel, RVNL, RITES, to name a few, IRFC, to name a few. I think if we just go and study those, I mean, you may not want to buy them, may want to buy them, that's a call. But I think as an analyst and as a value picker, you owe it to yourself to at least go through and study them. As someone else pointed out, that to get a bad NPA cycle takes 3-4 years after a good NPA cycle. So, I think it may be a bit more popular, especially on television channels, but I think it probably will make money for investors.
All right, interesting words coming in from the wise here on Diwali. We take a short break, come back, we get the promised interaction with Rajratan Global Wire. Sunil Chodia joins us.
मैं चाय नहीं पीता। हे एक मिनट, भुजिया के बिना चाय नहीं पीता। पिकाजी है ना? हाँ।
Amaji loves Picaji, loves Picaji.
Shine with gold, shimmer with silver. MCX wishes you a happy Diwali and New Year.
देश बढ़ चला है एक विकास यात्रा पर, जन जन की खुशहाली का स्वप्न लिए, प्रयासों में प्रण लिए। तो आइए देश के प्रति अपना कर्तव्य निभाएं। सभी टैक्स डिडक्टर्स 30 सितंबर 2022 को समाप्त हो रही तिमाही के लिए 31 अक्टूबर 2022 तक अपना TDS विवरण अवश्य ई-फाइल करें और 200 रुपए प्रतिदिन की लेट फीस और 1 लाख रुपए तक के जुर्माने से भी बचें। टैन व पैन सही कोट करें। सभी टैक्स डिडक्टर्स को tdscpc.gov.in पर खुद को पंजीकरण कराना अनिवार्य है। अधिक जानकारी के लिए incometax.gov.in पर भी लॉग इन कर सकते हैं।
Hey, heat my Milton.
पचास सालों से आपके लिए कुछ नया सोचते आ रहे हैं। मिल्टन।
This festival, bring in Nissan Magnite. Big on dreams. Bold in passion. Beautiful in every drive. Rush to the nearest Nissan dealership now.
Welcome back. As promised, let's get chatting with the management of Rajratan Wires. Now, an interesting move on the stock price. Remember, from earlier highs, we did see some correction in the stock price, and thereafter from the lows this morning, in fact, it's picked up quite some steam. The stock is virtually at the high point of trade with a gain of almost 3.5%, having recovered over 5% from the lows itself. The second quarter numbers were rather, on the back foot of, what the street was anticipating, and that's primarily because of a couple of factors that the management did allude to. Let's talk about each of them. We have with us Mr. Chodia. Thanks a lot, sir, for joining in. Always a pleasure speaking with you. The first question is that after your second quarter numbers, just wanted to understand, will you go ahead and do that 1,15,000 tons in terms of volumes this year itself? Because you have said that, you've initiated some planned shutdowns to streamline your inventory, etc. What happens to your volume guidance for the second half of this year?
Manglam, you are right. The Indian business is going good. There are not major problems, but we are hit by the, global recession in Europe and America, and volumes are affected because of that, especially in our Thailand company. Thailand company is more exposed to this, and the volumes for this year may not be as projected earlier. We'll be doing a growth of around 7-8% in volumes this year. Thailand may remain flat. India may grow around 10%. So now the new guidance will be close to 97,000-98,000 tons of volume.
And the breakup for that in India and Thailand would be what?
Thailand will be flat, as we had done 35,000 tons last year. So we'll be able to do that, and India will grow by 10%. So from 55,000 tons to something like 61,000-62,000 tons volume in India.
Okay. Yeah. Is there any downside risk to your estimates in Thailand, sir?
I don't think so, because we are, this is after calculating the risk. Yeah.
Okay. And in terms of demand, when it comes to India, can you just highlight what exactly the growth is looking like in terms of clients? Because we do understand that you do supply to some big clients in India. Is there any sort of disruption in demand simply because, we are working with a high interest rate environment? There could be possible rate hikes coming in the future as well?
Yeah, we have considered all that risk. Till last quarter, we were not able to, supply our customers on time. But in Q2, we could do that, and we are left with some inventories also. So we have recalibrated the demand, and going forward, we will also have competition with imports coming into India, which were coming because we were not supplying on time. So now going forward in next 2 quarters, quarter 3 and 4, Indian business will do well. We are sure about that.
Right. And that's interesting because, you are increasing capacity both in India as well as Thailand. Just wanted to understand your thoughts on the margins itself. In fact, EBITDA per ton on an absolute basis, because you've also planned to, procure materials locally to mitigate the risk of fluctuating currency rates. Just wanted to understand what kind of impact has the currency had on you in terms of basis points, and going forward, what is a sustainable margin level or EBITDA per ton, whatever you're comfortable giving us?
Yeah, margin goes down if the volumes are reduced.
Right.
Okay, and I have always said that 20-21% is not a sustainable margin. I would always, plan with 18% EBITDA margin, which is sustainable. And, when the volumes go down, our cost also goes up. So that is the reason for lower EBITDA percentage in Q2.
Okay. You did have some amount of high cost inventory that in terms of raw materials that you were sitting on in this quarter. And that is one of the reasons your margins also probably got impacted. Can you tell us if that has already liquidated? Are these external elements probably going to impact your margins going forward? And hence, what would be a sustainable range that you would probably see in the second half?
We always have a time lag between the price corrections. We buy raw material on a monthly basis and we sell to our customers on a quarterly basis. So most of the inventory correction has happened. So in Q3, we won't have a negative impact of the inventory cost. But as I told you, 18% will be a sustainable margin I'll plan with.
Right. Mr. Chodia, two-part question. One is on your market share. On the one hand, we have seen you increasing your capacity. Secondly, a lot of local capacities are shutting. So what does your domestic market share stand at? What does it go once, all your capacity increase is taken? And secondly, Michelin, you've been talking about them being empaneled as a client. They've now come on board as a client. How much do they add in terms of orders? When does the first order come in?
Michelin is not a very big customer in terms of volume, but their quality requirement and getting approval from Michelin gives a lot of learning to the company. Okay, so that way it is very important. With Michelin approval, we will have our customers open to buy material in Europe and other parts of the world. So that way it is very, very important. So now we have got regular supply started to Michelin in India, and we are also talking to customers in Europe based on these approvals. On the capacity expansion, we are going ahead with our planned capacity expansion. Thailand will become 60,000 tons by end of November. We have got the environmental impact analysis report, and we are allowed to increase that capacity. Of course, the utilization in Thailand will be low because of we are exposed to customers who in turn export tires to Europe and America. So their demand has come down. They are not running at 100% capacity. That is the only single biggest reason for poor performance of Rajratan in Q2. Otherwise, Indian business is doing well. And going forward, long-term plan remains intact. We are, as I have been telling you in my previous interactions with you, that we plan to grow by 20% CAGR in next 4 to 5 years. So I'm very confident about that.
And on the market share?
In India, our market share is close to 45-46%, and we don't anticipate a bigger market share. But this Chennai capacity is for the growing market of India. So whatever growth comes in the tire, consumption or tire production, we are targeting that growth. And Chennai being the port-based location, we are also planning to export at least 50% of production from our Chennai facility.
Okay, just a quick last question then, sir. Yeah. Michelin is one of your clients. You are probably trying to get their business in the export markets as well. But yes, any other big clients that you would, which are probably in your pipeline, which you are probably bidding orders for currently? If you could just leave us with any kind of estimate.
We are approved with all the tire companies in India. Michelin was the last one. We got approval. So now it is the question of bigger volume and to more locations of this plant. All these multinational companies have number of factories around the world. So right now we are approved with one factory of Michelin. We are approved with Bridgestone in India. Now we are targeting like from Thailand, much bigger volume in Thailand in the coming years, and also supplying to their Southeast Asian locations. And similarly, Michelin has a very big presence in Europe. So we have set up a marketing office in Europe, and now we are making efforts to get some share of the European market.
Okay. All right. So we're going to leave it on that note. Thanks very much for joining in and speaking to us. So that is Rajratan buyers, not that confident in terms of the export market, but definitely confident about the India business. They are expecting volumes to grow around 10% for India, and for the export business, which is basically from Thailand, they expect it to remain flat. Take a short break, but up next, we'll be connecting with the management of KEC International to discuss their new order wins. Stay tuned. Welcome back. Well, quiet for the markets except for the mid-cap index, which is managing to hold its head above the water with a gain of around 0.4%. So let's get talking to a couple of more companies. KEC International is in focus as the company has bagged new orders worth around 2,000 odd crores. We have with us Mr. Kejriwal, who's the MD and CEO of the company, joining in to discuss this particular order win. Mr. Kejriwal, hi. Thank you very much for joining in and season's greetings. If you could just take us through this particular order win of around 2,000 odd crores, which segment is it in? And what does this mean for your business? When does it start accruing to the P&L?
Happy Diwali and a New Year to you. Thank you. And thanks for having me. I think we announced orders of roughly around 2,000 crores and odd, as you said, of which 50% is in our civil business and 30% in railways and the balance in the T&D business. So this takes our order book to around 27,500 crores or something. And we have another 6,000 crores of L1. So put together, we are almost close to 34,000 crores of, order book plus L1.
34,000 crores of order book plus L1. This 2,000 crore order that you've got, Mr. Kejriwal, what does it take your this year's order inflow to total? Because you had guided for around 16,500 to 17,000 crore worth inflows. So is this part of that plan, or can we see incremental orders coming in as well? Where does that stand at for you?
So with this intake, we are roughly around 10,500 crores, which is in a way 40% more than last year. But I think we are looking at around 18,000 crores. We may probably look at a slightly higher number, but 18,000 is what we are now looking at as the order intake for the year.
And your order book split still stays the same, 60% from civil, rest from railways, 24% from T&D?
No. I think my order intake, my order book today is around 45% is from T&D and roughly slightly under 20% from railways and around 30% from civil, and the rest is cables and oil and gas, etc.
Okay. I just wanted to touch upon what's happening with the export business because, there's disruption in Europe, there's inflation in the US as well as the UK and Europe. Give us a sense in terms of how that's impacting business on the ground for you.
So it's a very odd situation in the sense that our Middle East market is booming. Even today's order intake has got, I think, 3 or 4 orders from the Middle East. So in terms of market, Middle East and North America, especially the US, these two markets are doing very well. On the other hand, there is clearly a supply chain disruption happening on supplies, especially from Europe. The third piece is the logistic cost. We still continue to be impacted by high logistic cost. They have come down, like we were earlier paying $500, a container before the COVID. It went up to $2,000. Now it's come down to $1,000. So there is still a piece of disruption which is still going on in terms of logistics. But what is also happening is that, markets like US, which we had virtually lost to countries like Turkey and all that, are coming back because of the huge increase in the gas price and the 75% inflation in Turkey, etc. So some markets are coming back to us because of the global disruption.
All right. Just wanted to understand with regards to your guidance for this year, you had earlier spoken about 20% plus sort of revenue guidance, which you had up from 15%. Just wanted to understand if that stays. And you refrained from talking about margins in the near term, even as you guided for double digits, starting next year, as early as next year. Do you want to update the viewers on this?
So Mangalam, we had guided 15%. In our last talk, we had said that we will definitely do 15% plus. Now with the current order intake, etc., I think the numbers will probably start inching towards 20% revenue growth. As far as the margins are concerned, I think the pressure on the margins still continues in the way it was earlier. A lot of old orders are getting executed, and when these new orders start coming into execution, the margins will definitely start inching up. So clearly we'll see some bump up happening in Q4, and next year we still hope that we'll be able to do a double digit.
Okay, when you say bump up, so what would it mean? At least a range that you can provide us when it comes to margins. I think you did around 5.1% on a blended basis in Q1.
So I think difficult to give a number right now, because even now the commodities and all are still very volatile. If you look at copper, someday it goes on by 500, goes up and all that. So difficult to put a number right now.
Okay. All right. The other segment which I just wanted to briefly get your thoughts on was the entire railway space. And the reason I ask is that, we had Mr. Ramesh Damani, talk about how he's bullish on the railway segment. I just wanted to understand from your perspective, what is business looking like within that segment? What is the order inflow? Is there a lot of demand that you're seeing?
So if you look at the railway order inflow this year, I don't have the exact numbers, but we did around 2,500 crores or so. Railway order intake has already happened. We are also L1 in some more tenders. So 2,500, if you put it in the context, is last 2 years, we had the similar number of order intake in the last 2 years. So we have already reached the last 2 years order intake in the first 6 months. We are seeing a large number of projects being announced by railways, especially on the doubling, tripling, and also on the speed upgradation. We are seeing a clear focus in the ministry on how to increase the speed of trains. And that's resulting into more orders on electrification and, on the track improvement, etc. So I think if you ask me, we are much more bullish than what we were maybe a few months back on the railway segment.
All right, so 20 to 25% is the revenue aspiration that you had from that segment. Where does that stand at now, since you're a lot more bullish? And civil was the next big growth driver for you. Where do things stand there?
So railway will still contribute around 20-25% because we have an overall growth in our revenues, especially in the civil. Civil will definitely double from last year. I think we did around 1,800 or 1,900. This year we should definitely do 4,000 crores in civil. In fact, in today's order intake, what we announced, we have got a couple of water projects and also our third data center order. So I think that's another interesting area which we are seeing looking up.
All right, Mr. Kejriwal, always a pleasure speaking with you. Thank you so much for giving us the clarity of what one can expect this year and hopefully double-digit margins next year as well. Good luck to you. Season's greetings once again. With that, we slip into a short break. As we do that, here's some great news for you investors. You can now track US markets in real time on CNBC-TV18 and moneycontrol.com. Remember, log on to the Money Control website or the app. Stay informed about all that matters in the global markets. Track the US markets on Money Control. Welcome back. Let's get chatting with the management of Ramkrishna Forgings. Lalit Khaitan, who's the Executive Director and CFO of the company, joins in after their second quarter numbers. It was a good set. We have seen their revenues for the company grow by almost 42% in the second quarter, taking their half-year revenue up to around 52%. Margins stable at around that 21-22% mark as well. The company had expected to achieve a guidance of almost 20% CAGR over the next 3 years. Let's, ask them. Mr. Khaitan, thank you so much for joining in. Season's greetings to you. You were looking at 15 to 20% growth in this year. The first half itself, you've done around 52%. Just wanted to understand whether you would like to, up your guidance from this 15 to 20% mark.
First of all, thank you and very happy Deepavali to you and the entire viewers of CNBC TV18. Yeah, certainly we have achieved a good number, but certainly guidance is going to be remaining in the range of 20 to 25% growth, and we will stick to the guidance.
Okay, so you're maintaining 20 to 25% growth for the full year?
Yeah, the full year 20 to 25% over FY22.
Okay, can you just break up the growth for us? How much are you expecting in terms of the domestic market as well as some of your key export markets?
See, overall revenue will be around 60% for the domestic and 40% for the exports. And again, in the exports, North America certainly will take almost 2/3 share. Europe and others will take 1/3 share.
Right. Just wanted to understand, why is it that you keep your guidance at just around 20 to 25% as against the first half revenue growth of over 50%? And that's primarily because, you are bullish on the US truck sales as well. The recent numbers that we have, there was a record high monthly Class 8 truck orders in North America. What makes you circumspect?
No, we are not circumspect. We are quite confident. But numbers, you see the commodity prices are also they're cooling down. And so prices may have impact on the top line. And we want to be a little conservative on account of global instability in Europe and little bit on account of inflation. So we want to, and rather, if you look at the North America, there also recession and inflation, lot of things are going on. That's why we want to keep us at 20-25%, not very aggressive.
Okay. Your export volumes, in fact, in the quarter gone by were down 2.3% on a year-on-year basis. Do you have any visibility in terms of what your volume guidance for the export market specifically would be in the second half?
It will be certainly up from here by at least 10% in terms of volume.
And overall volumes for this year, I mean, last year you did 1.11 lakh. This year, the first half, you've done around 62,000. What does your overall tonnage target stand at this year?
Yeah,
for this year?
So the second half should be better than the first half, maybe in the range of 5 to 10% in terms of volume guide.
So second half would be about 10% higher than the first half. You have 68,000 tons coming here. First half, you've done around 62,000 tons. So you're looking at a number closer to 130 this year itself. Is that correct?
Yeah, it's near to that.
Okay. Can you give us an update on your debt figures? Because your debt has been on a downtrend. It stood at, I think, a little around 1,300 crores as of the previous quarter, and it's down 16%. Can you just tell us what the update is and whether or not you'd be looking to reduce debt further?
Yeah, we are on the certainly reducing the debt, and with the kind of performance we are posting, the debt will go down further. And already we have given a guidance in the next 3 odd years, we will be near debt free. So we will be working on that target and consistently reducing in terms of our performance, and whatever will be the free cash flow, we will try to reduce our debt from that.
On an EBITDA per ton basis, what kind of numbers can you do? I mean, how much do you think is sustainable going forward, given the correction that we're seeing in raw material prices as well?
See, so raw material prices in our case is certainly pass through, whether it goes up or it goes down.
Exactly.
So margins are going to remain at that level. So top line may be a little bit here and there, but margins will be maintained, and kind of EBITDA we are posing, I think there will be a growth on that because volume will grow. Okay. And that will help us in improving the free cash flow, and with that certainly the debt number will go down.
Okay. How is business looking in the domestic market, sir? Because, you know, we were just talking to the management of Rajratan Wires, and they said they are a bit cautious on the export market, but they're quite bullish on the domestic piece. They're expecting around 10% growth. Tell us how demand is looking like in the domestic market. What would you be guiding for? Do you think that's probably going to outpace your expectations as well?
Yeah, domestic market demand is quite robust, and we are seeing quite a good demand in MSCB. We are mainly in MSCB and LCB, and we are seeing increase in targets by the OEMs, and rather weekly targets are even revised positively. And we see a very good H2 also on account of domestic. Coming to exports, yes, export also we look to grow in H2. What we did in H1, we think we will do much better in H2 in exports, because see, you have seen the Class 8 numbers coming up. In Europe also, if there are concerns on the energy side, energy cost, manpower cost, inflation. But one thing is that Europe is also looking at importing more and more on the component side, and that is helping us. Plus, the China's policy of zero tolerance on COVID is not helping China, and that is also helping us in terms of exports.
And finally, before we let you go, you know, you said that you are increasing your capacity, etc. as well, and by FY24 you could do revenues of almost 5,000 crores. That would be an 80% jump from where we are right now. And also EVs, you expected that to be about 6% of your overall revenues by FY24. Where do these numbers stand at by the end of FY23?
No, I think a little bit correction. My numbers, what we have given, 5,000 crore top line, that is FY25.
Okay, that's 25.
Similarly,
okay.
That was, yeah.
And, EVs?
So, yeah, EV will be certainly target is to achieve 6% of our top line by EV, and we are consistently growing. Recently, we have got an order of 15 million euro from one of the European OEM, and we are working with our OEMs to increase our presence in EV.
All right, thanks a lot, Mr. Khaitan. Always a pleasure speaking with you. Wish you a happy Diwali once again. Let's hope that the second half of this year pans out as you've guided for as well. Strength is what the company is looking at in terms of volumes, but cautious about the overall revenue picture, primarily because commodity costs are coming down, even as they're confident of maintaining their EBITDA on a per-ton basis. We take a short break, come back, and since we spoke about commodities with Mr. Khaitan, let's take that point forward itself. Manisha Gupta joins in with Peter Maguire, CEO at XM Australia, to talk about all things commodities. Welcome back. You're watching us here on Halftime Report. It is the penultimate day of today's trading session ahead of the October series expiry. So important to see how the setup is right now, because we're off the highs on the Nifty, in fact, virtually at the low point of trade. Just a couple of things that I'm watching out for. In October series itself, the Nifty has gained about 5%, which is much better than what it has performed in the last couple of series. The September series was a -1 for us. And in that, the gains have been led by the Nifty Bank, which is the one which is seeing a bit of profit taking in today's trading session as well, though it has recovered from the lows for the Nifty Bank, closing in on that 41,200 mark. As far as the Nifty is concerned, just keeping an eye out on a couple of these active options. The 17,800 call, where a lot of people were thinking that there could be a resistance, that's back into the picture. Almost 50 lakh shares written on that one for a premium of 25 rupees, telling you that levels upwards of 17,800 may find some resistance. And also on the lower level, 17,700 put was rather active for a premium of almost 88, 80, 90 odd rupees. Most of the street believes that maybe 17,600 would be a bit of a support, but increasingly we are seeing some unwinding on the 17,700 put. So let's see whether we do get some sort of support at lower levels or not. For those who are writing the 17,700 straddle, which is a call and a put together, they are expecting the market to be in that 17,560 to 17,840 range, and at the lower level 17,500 of course is the 50-day moving average, which would be an important support to watch out for. But that's as far as the equity markets are concerned. Manisha Gupta now, as always, joins in with a round of all things commodities and currency. Manisha.
Well, thank you so much for that. And I have a guest with me. I am joined by now Mr. Peter Maguire from XM Australia. Peter, hi, good to have you. I really want to start on with the crude oil prices, because we're looking at $93 to $94 a barrel holding. That is one, but the gas prices have continued to decline, and we are looking at $5 per MMBTU, just about holding half of where we were at the higher point of this year. How are you looking at the energy pack?
Well, happy Diwali first off, Manisha, and lovely to see you. Look, first, as far as if we look at crude, it seems to be very much range-bound, and there doesn't seem to be any real breakouts on either side at the moment, so it's very tight. We're seeing that $85 to, say, $95 range for Brent and WTI. So until we see some movement, you've got US dollar index sitting at 112. It's put on a little bit of pace. And if you're looking at the gas price, yes, you've got to be very, very happy with that from a consumption side or the consumer side in Europe. And those megawatt hours are just being crushed. So that's a good sign. So maybe we're at the tail end of this inflation spike.
Most of the global banks and brokerages reports suggest that it's not going to be a lot of profit taking from here on. And this quarter perhaps could be majorly between $85 to $100 for the Brent prices. How are you looking at that range?
Well, I think it's probably right unless you were going to see something dramatic happen from a geopolitical front, if you saw something from a weather outages. But we're very conscious where that US dollar's trading, and I think that also you've got to be mindful that the deals with Saudi and US that's not looking that sharp. So I think you'd probably be erring to the upside, maybe closer to 100 than 90. So that's what I think the mood of the street is. But that's for any surprises are going to really change the dynamics of it, and that can happen very quickly, Manisha.
Absolutely. And, since you mentioned Diwali, and yes, there have been a lot of conversation with the experts on how commodities should be a part of your portfolio as we move ahead from here, because the volatility will just about continue, and you need to have, a perfect portfolio, perhaps, where you have to have commodities within that as well. When you look at a portfolio, what would you want to start including in? Is it going to be energy, precious metals, base metals? Where do you see strength or gains come in?
Well, if you're looking at physical for the first side, you'd have to say silver and gold are a good place to be, because I think most analysts are saying that you're going to see an uplift later this decade, and could happen very, very quickly. So as far as the currencies, we've had massive currency wars over the last 12 to 18 months. So yes, precious metals. Secondly, yes, depends on how you're holding it. They're easy to hold in a physical, but if you're holding from an ETF standpoint or paper markets, then you'd probably have to look at, markets like base metals, predominantly copper, and be conscious as far as, some of those other ones, maybe energy as well. So, yeah, they're the ones I think you've got to keep an eye on. And it's probably food as well if you were looking at some of those as far as soybeans, wheat, from a demand side, Manisha, over the next 12 to 18 months, I think should be quite strong.
When you look at this year, it hasn't been such a great one for gold and silver. But I was referring to the Goldman Sachs report, which says that commodities for the next 3 months, 6 months, and 12 months should be a part of your portfolio, and you would see gains across energy, base metals, and even precious metals. Where, by the way, their sense is that in the next 12 months, precious metals will give you something like a 23 to 24% of a return. Are you that bullish in gold and silver?
Yeah, in some ways I am, because I think they've been very much held underwater, and that's the situation at the moment. You look at Bitcoin as well at 19,000, so that's a long window, and I'd say over the next 18 months it could be very wild and woolly as far as the US and global demand, unless they can tame inflation. You've got the central banks, what they're prepared to do with rates. So let's hope by sometime this time next year that they're pulling back the rates and not raising them, Manisha.
When you look at gold and silver again, Peter, what are you more bullish on? Because everybody that we've been talking to say or suggest that silver perhaps could really outperform on the higher side.
Yeah, exactly it, because I think it's got that little brother's been more held underwater than big brother. So yes, there's probably more upside, and that's the real attraction to many traders and analysts are saying that the physical silver market is where you want to be. Shortages and supply issues. A lot of analysts and a lot of traders are really trying to get as much as they can. They see opportunity with it, and it's probably fairly suppressed at the moment. That $18 range is cheap and cheap, cheap.
All right. Always a pleasure listening to Peter and Manisha, your conversations. Thank you so much for joining in. With that, we're out of time on this edition of Halftime Report. Let's hope what happens, whether we see any sort of recovery or not in the second half, because tomorrow's a holiday and day after is the all-important October series expiry. But for all things market, Business Lunch will take all the action ahead.
Brought to